Hello everyone, myself Sampath Kumar. In this video, we are quickly going to revise product lifecycle costing. This is exclusively useful for CMA final students. Same can be used for other students who are having this in their portion. Let's start. Just to explain in a nutshell, if someone is kind of want to brush this concept up. When we say product life cycle costing, we are looking into the product for its entire life. Generally, when we do the costing or accounts, we do it for a particular period, this month, this year, next 5 years. So we only look into the periodicity concept, like in this particular period, what is the sales, what is the variable cost, what is the fixed cost, what is your margin, and what is your expected return and profit. This is how we do it, right? But in the product life cycle costing, we are looking into a particular product for its entire life. Okay, example, I want to introduce a new product in my existing business lineup. So how many years I might be selling this product, what is the useful life of this product, from the research and development, then initiation of any business or anything, any patent that you are taking, and operational expenditure. So throughout the entire lifespan of the product, from the introduction till the complete exit from the market, what is the total profit of that product? Okay, so we are not looking into year on year basis, rather we are looking into the entire life. That is a basic structure you need to keep in mind. So if in examination, if the question is given year number 1 this many units you will sell, year number 2 this many units will sell, year number 1 this is a selling price, year number 2 this is a selling price, we have to add up everything. Okay, so we need to see from the entire life of the product. Okay, yeah, so there are few questions, I think 4-5 questions. I'll be solving all these questions. Anyway, it's already solved, but I will be explaining the concept behind that. Wipro is examining the profitability and pricing policies of its software division. So Wipro is a company, they have a division, software division. The software division develops software packages for engineers. So the division develops certain software. It has collected data on 3 of its more recent packages. Just like our ERP, look, they have certain software. So they are having 3 different types of softwares: ECE package for electronics and communication engineering, CE packages for computer engineering, and IE packages for industrial engineering. Whatever it may be, we are not concerned about it being a cost accountant. We are concerned about there is a company which has a division, and that the division is having 3 different types of softwares. So that is what we understood so far. Summary details on each package over their 2-year life cycle product lives are. Okay, so they are saying, they are mentioning the profitability on everything relating to 2 years. But as I already said it, when we are doing product life cycle costing, we will sum up everything. So year number 1, year number 2 separately given, ECE, CE, IE, what is the selling price, how many units they will be making the sale. Okay, this is a selling price, these are the number of units. This is very basic costing, but now comes to the main point. Assume that no inventory remains on hand at the end of year 2. So which means that whatever the units that they develop, they'll be selling in the market. So there is nothing like closing stock. Wipro is deciding which product lines to emphasize in its software division. So because the company is having 3 different softwares, they want to understand which of the product line is more profitable, so that they can emphasize more and get more profits. In the past 2 years, the profitability of the division has been mediocre. So there is not much profits in this division. Just to say that there are 3 products or 3 softwares, but they are not giving sizable chunk of profit. Wipro is particularly concerned with the increase in the R&D cost in several of its divisions. So unnecessarily we are incurring R&D costs. Just let me know which of these softwares is more beneficial. In analysis at the software division pointed out that for one of its most recent packages, i.e. major efforts have been made to reduce R&D cost. Last week, Amit, the software divisional manager, decides to use a life cycle costing in its division. So after all this, now someone is coming up with an idea that no, we will be using the life cycle costing. Okay, so instead of doing it on a year on year basis, we'll do it for the entire life of the each different 3 different softwares. So that managing the division manager, what he is saying is, year number 1, year number 2, year number 1, year number 2, year number 1, year number 2. So there are three different softwares. their life, what will be the revenue in each year, what will be the cost, R&D, design of product, manufacturing, marketing, distribution, customer service. So everything is given in the question only, so we just need to sum it up, that's it. Present a profitability cycle income statement. So just asking a income statement, profitability income statements, just like sales divide, deduct the variable cost, contribution, deduct the fixed cost, you will get the profit. Whatever the way that you present, it is a statement. Okay, so when they say it's a statement, properly we have a structure depending upon what is given in the question, with what kind of a bifurcation is been given, is it fixed or variable, manufacturing, like depending upon the question, you just need to write down that statement. Okay, so solution also we will try to do it for one, remaining is all more of a calculation based rather than any understanding. We'll only do it for ECE. Year number 1, they are selling 500 units. Okay, not 500, 5 lakh, 3 zeros they are omitting, so they are writing 3 zeros here. So 5 lakhs is the revenue in year number 1. Coming to the cost, R&D, design, manufacturing, marketing, distribution, customer service, everything is given in the question. Nothing, they are not even segregating which of the cost is fixed or which of the cost is variable, because you are looking into the lifespan of a product, right? That doesn't make any difference, because no, you are not looking into break-even point, you are not looking into margin of safety or any other analysis. So they are not even interested in segregating it also. So that way they are getting the total cost of this much. So they have the revenue, they have the revenue in year number 1, revenue in year number 2. So this is the total revenue in both the years. Total cost is 2150, profit is 350. Sir, what have you done? I have not done anything. What he has also done is a very simple thing, just presenting the information in a statement format. Year number 1, what is the sales? Year number 1, what is the cost? So sales minus cost is a profit. Okay, like that they have done it for three softwares. So the software 3 is in fact giving them a loss. Now just to find out what is a percentage of profit wise, you can say ECE is a most profitable package, and this is IE is a least preferred, it is giving you a loss. Okay, so that is a very basic, there was nothing much room for me to explain more also, but with the coming questions there will be certain trickiness, and which we will be understanding anyway. Zenith Limited manufactures tablet batteries. The company is preparing product lifecycle budget for the new type of battery. Development on the new battery is to start shortly. Estimates for the new battery are as follows. Okay, so when we read the question, we need to pick up what is exactly required or what is relevant for us, especially subjects like costing. They will be giving lot of information which we are not going to use, so we need to be little prudent, and we need to be little smart in realizing which of the information is useful for us, so that we can write that in a answer sheet. So nothing has been nothing is important so far what I have read. Now life cycle units manufactured and sold is 2 lakhs. So entire life cycle life of the product may we are going to manufacture 2 lakhs and sell 2 lakhs. So there is nothing like closing stock also. Selling price per battery is also given. Okay, so they are making batteries, they are manufacturing 2 lakh batteries, they are selling each at 55 rupees per battery. Okay, so life cycle cost में R&D 8 lakh, manufacturing में variable is given, variable cost per battery, variable cost per batch. So this is where little smartness is required. Not even, I don't even say it's a smartness, but little cautious is required. The reason is certain cost is giving per battery, per unit. Certain cost is giving per batch. Okay, maybe they will put batteries into a particular box, and then they may whatever they want to do. So we need to be little cautious when it comes to what is the unit of measurement. Here the variable cost per battery is 25. So per battery is fine, because we will calculate everything per battery. So here it is given in battery. Variable cost per batch is 300. So it's per batch. Okay, so you cannot say that 300 multiplied by whatever the number of units. Okay, batteries per batch. So now you will understand, we are making 2 lakh, we are selling 2 lakh units, and each batch will have a 250 as a manufacturing. In manufacturing cost, we will have a batch, which batch consists of 250 units. So 2 lakhs divided by 250, so 800 batches you will have it here. The same way fixed cost is given. Marketing mein you will have variable cost per battery, that's fine, that is the unit of measurement is 1. Fixed cost is also given, no issues. Distribution mein you have variable cost, you have batteries per batch. So distribution bole to like maybe for transporting from one location to another location, they will put it into a different size of a batch, but while manufacturing they batch or they run it in a different size. It is very much possible, right? Like while manufacturing, maybe there is a machine which takes 100 units at once, so I will manufacturing as per the machine capacity, but while transporting it from one location to another location as a for distribution convenience, I might use a different batch. So the batch here need not be same, and sometimes it cannot be same also. So manufacturing may you have 800 batches, but for distribution 2 lakh is your unit and each batch will have 100 units. So 2000 batches will be there for the distribution. Again you have customer service cost per battery. For battery they said 1.7 rupees. Okay, ignore time value of money because you are doing it for 2 years, so don't say that I will be discounting it at a certain rate which I assume not required. They simply said it in the question that you ignore the time value of money concept. So the question is clear. Question is, from the stage of R&D till and manufacturing, marketing, distribution, everything they gave it. Okay, so now we need to understand, calculate the budgeted life cycle operating income for the new battery. So you calculate everything. How you will be calculating? You before starting it, assuming if I were to write this exam, so you know what is the selling price. How I will be knowing? Number of units you know, selling price you know. So just imagine, visualize, sales you will come to know. And coming to R&D, that's one particular type of a cost that you deduct. Variable cost per battery multiplied by number of units. Variable cost per batch, so that is 800 will be the number of batches, 800 multiplied by this amount, and the fixed cost you deduct. Marketing mein you will have 3.5 per battery, so 3.5 multiplied by number of units, you will get variable cost in marketing. Fixed cost that you deduct. Distribution mein again 140 multiplied by number of units, and batteries per batch 100, so you are having 2000 batches. 2000 multiplied by 140 will give you distribution variable cost. Fixed cost is given that you deduct. Customer service cost per battery 1.7 multiplied by number of units, that will give you the cost. So you have the sales, you have the different costs, reduce all this cost from the sales, you will get the profitability. Okay, that is exactly what they have done. So I'm assuming, or I'm sure now coming into at this level of final, the calculation would be easy. It's more important to understand the concept. One more important thing is to visualize before writing or putting it putting your thought onto the paper. Okay, so research and development cost mein variable cost, just now I said. Batches mein you convert and multiply. Fixed cost mein marketing variable, fixed. Distribution mein number of batches fixed. Customer mein you have 3.4. So 98,20,000. I'm not focusing on the calculation. In fact, I would suggest you also not to focus on the calculation at this point of time. Focus more on the methodology of solving it and how to solve it, how to start the question. That's where you need to push more, put more efforts, rather than just taking understanding and then doing. It is more of a waste of a time, especially in the paper of costing. So income mein you have 1,10,000, you know, sales number of units multiplied by selling price, so total sales minus total cost is giving you the profit. Okay, so if it is for 4 marks, 2 marks is absolutely there for you to take. Now coming to the second part of the question, what percentage of the budgeted total product life cycle cost will be incurred by the end of the R&D? So by the time you do the R&D of the battery, what percentage of the R&D cost will constitute out of the total cost? Sir, what are you trying to say? So we understood what is the total cost of the total cost in the life of the product, assuming it is 100, that's fine. Till R&D, how much percentage expenditure you have incurred? See, till R&D we have incurred 8 lakh. 8 lakh divided by what is the total cost? So 8 lakhs divided by 98,20,000. So 8.15%. Okay, till the time that you realize the product is successful, you have already incurred 8.15% of your cost. So there is no point to go back also. Like it's sometimes you management we need to take a decision, like should we continue to do the research or should we continue and start the manufacturing, or should we stop this research altogether now, because we have incurred a lot of cost. So now you understand that most of the expenditure you have already incurred. So instead of going back, if you go back, there's nothing else. If you at least start and start the manufacturing and sell some products, so you might recover some cost. Okay, that's not the case in this exam, in this question, but that could be a question also. Next, company's market research department estimates that the reducing the price by 2.5% will increase the life cycle units by sales by 8%. Sir, what is the impact of that? So some of the one department is saying that, sir, we will reduce the selling price by 2.5. What is our existing selling price? Existing selling price is 55, right? So usme se 2.5%, 2.5 rupees you deduct it. Okay, so 52.5 will be the new selling price. By the time you read, you understand that. And then what else they are saying? They are saying that there will be increase in the number of units by 8%. So number of units, you got it here, right? 2 lakhs. 2 lakhs multiplied by or plus 8%, whatever the number that you get, that will be the revised new units. Should I continue to tell the remaining part? Not required, right? Exactly whatever the format you have done it here, whatever the format that you have done it here, again you will do it. But only the point where you need to be cautious is, while calculating the variable cost, instead of multiplying it by 2 lakh rupees, which was the units earlier, now you will multiply it by 2 lakh, I think 8% bole to 2,16,000. Is it? Yes. So you will multiply it by 2,16,000. You see, wherever there is a variable cost, they are multiplying it by 2,60 rupees. Okay, so again in the question one more point was given, which I did not read only. Batch size is also increased by 8%. So what does that mean? So whenever the question they have mentioned, right, batteries per batch 250, so that will increase it by 8%, which means that the numerator also there is an increase, denominator also there is an increase. There is no complexity. What is the revised quantity divided by what is the revised batch size? You will get the number of batches that you required multiplied by cost per batch at each respective places. Okay, that's how you will find the revised cost also. That is enough for this. I'm not going to discuss anything further than that. Okay, in that way they are getting 10,36,800 as a profit. Before reduction they were getting before that they were getting, oh my god, what was the earlier profit? 10,36,800, 11,80,000. Okay, so earlier it was 11,80,000, now it is 10,36,800. So now it is lesser, right? So don't reduce your selling price. Okay, that's the answer. That is a basic thing. Every question we are doing that. But now the point that I want you to focus is, focus more on the reason behind doing it at a particular way, in a particular way, rather than taking the paper and doing it and thinking that okay, my practice is going on. In fact, that is not the practice, because you know the question, you know the answer, so you are doing the same thing. So definitely this question will not be coming in the examination. Definitely you will not be remembering this also. So it's more like you read the question, you don't see the answer, visualize, understand what is given, what is required to be done, then just come to a conclusion. Okay, I will start this answer in a particular way. So just picturize and then see the answer. So if your thinking pattern is in a same line as how the answer has been given, then you are practicing. I am saying this at an advanced level, someone who has done the practice multiple times. Okay, someone who is doing it for the first time, this is not the way. Yeah, so there is one more question. We'll pay attention here, please. SRM Limited has developed a new product, Kent, which is about to be launched into the market and anticipates to sell 80,000 of these units at a selling price of 300 over the product's life cycle of 4 years. though it's 4 years, you will not be doing divided by 4 or anything of like of that sort, because you are doing everything over a period of time. That then only you are calling it as a life cycle costing, right? So for a period of 4 years, you are going to sell 80,000 number of units at a price of 300 rupees per unit. Data pertaining to the product can enter as follows: cost of the design is 10,25,000, manufacturing cost is 125 per unit, selling price is 12,500 per year plus 100 per unit. Okay, so selling cost is it's both. One is period cost 12,500 per year, both multiplied by 4, because you're doing it, the product is going to stay with you for 4 years, right? Multiplied by 4, 100 per unit. So number of units multiplied by 100. So that should be the answer. Administration cost 50,000 per year, so it's per year multiplied by 4. Warranty expenses 5 replacement parts per 25 units. So how many units you are going to sell? You are going to sell 80,000. 80,000 divided by 25 units multiplied by 5. So you will come to know how many units there will be a replacement, and you will be incurring 10 rupees per part multiplied by 10. Okay, I will show once again. One visit per 500 units, cost per visit is 500 rupees, which means that 80,000 divided by 500 if you do, you will come to know how many visits we will make. For each visit we will incur 500 rupees, multiplied by 500 will give you the visiting charges, warranty charges also. Okay, so that's very pretty simple or straightforward question. I would say if it comes, you can bag 4 marks. Compute the product Kent's life cycle cost. Again, life cycle cost bole to just think like the product is for 1 year only. Look, I mean, think bole to like, don't segregate it into periods. If it is running into 4 years, just multiply it by 4. If it is running into 3 years, multiply it by 3. If it is a period cost, if it is a unit based cost, we will not consider anything else also. Okay, so first thing first, cost of design is 10,25,000. They have taken 10,95,000. Manufacturing cost 125. Throughout the life of the product, we are going to manufacture 80,000 units, so you are going to get total manufacturing cost. Selling cost, as I said, there are 2 elements. Selling cost, one is period cost 12,500 in a year multiplied by 4. So you will come to know what is the selling cost in 4 years. Then 100 rupees per unit. So you are going to sell 80,000 units multiplied by 100. So this is again second part. Total it will be this much. Administrative cost 50,000 per year they have given. We are doing it for 4 years. So multiplied by 4 will give you 2 lakh rupees. Warranty expenses, as I said, 80,000 units you are selling divided by 25 multiplied by 5. So you will come to know for each warranty how many parts you are replacing. For each part you are incurring 10 rupees. And coming to the visits, you will visit for one visit for 500 units. So 80,000 divided by 500 if you do, you will come to know how many visits you will make. For each visit you are incurring 500 rupees, so multiplied by that you will give you the total product cost. Okay, so next question in this part only. Suppose SRM can increase the sales volume by 25% through 15% decrease in selling price. Should the company choose the lower price? Same question. So whatever we have done in the earlier question, same pattern. Now what will be the case? 80,000 is the present capacity. Now they are saying we will increase it by 25%. Okay, so it will be 1 lakh. Fine. Decrease the selling price by 15%. So decrease the selling price, also selling price, is it given anywhere? Yeah, it is given 300. So minus if you do 15%, you will get the new selling price. Is there anything different? Nothing different. But while calculating this cost, you have to ensure that you multiply it by 1 lakh, not 80,000. Example, 125 manufacturing cost per unit, that remains same. Question is silent. So we'll take multiplied by 1 lakh. Okay, coming to the selling cost, period cost, again it's going to be 4 years only. 12,500 multiplied by 4. So that is a selling cost per 4 years. And then you are having a 100 per unit. So again you are manufacturing 1 lakh units. So 100 multiplied by 1 lakh, this will give you the total selling cost. And coming to the warranty, same logic, 1 lakh units total you are selling, 25 times, so there will be a replacement. Every time you will replace 5 parts, multiplied by 10. Again visits, 1 lakh units totally you are selling, divided by 500. So every 500 there will be 1 visit, and every time you visit there will be an expenditure of 500. So that's how you are calculating the revised statement, revised product life cycle costing also. Now you make a decision. In the earlier we had a profit of 44 lakh 85,000. Now we are getting a profit of 14 lakh 25,000. So it is better not to revise it. Let it be the case, let it be the same as before. So they should not cut the price. So that's it guys. I hope you are finding these videos helpful. If you are finding it helpful, please let me know in the comment section. That's the only way I will come to know that you are getting any benefit out of it. Otherwise there is no point in making further videos of videos like this. Thanks for watching. Have a nice day.